Is waiting for a property crash actually worth it, or will prices continue to rise, or will there actually be a crash? If you're looking to buy a home right now, or perhaps an investment property, this is generally the common advice. If you find a property you like, you can afford it, and you can see yourself staying there or holding on to it for the next plus 10 years, you don't actually have to worry about what happens within the market, and really just make the best decision for you. I've always thought that this was fair advice. I've heard a lot of advisors say the same thing. I've even provided this advice in the past as well. However, it's a bit of a cop-out. Perhaps it's too simple of an answer, and you really need to ask harder questions. Maybe you are hoping for a crash so you can get onto the property ladder and you want to time the market perfectly. Or perhaps you feel that now is the right time to buy and prices are going to continue to go up. Let me know what you think in the comments below. Realistically, conditions are never perfect, but some people seem to time the market perfectly. Are they just lucky? I used to think some people could time the market perfectly, knowing exactly when to buy and exactly when to sell. However, I was wrong. They use simple systems and have a strict criteria. Very often, successful businesses will use systems to determine their decision-making processes. Every system is going to be different, but businesses that actually survive market ups and downs generally have good systems in place. Real estate investment companies put similar systems in place. They don't try to time the market. What they do is they put down strict criteria and terms, and if those terms and criteria match, that determines if a deal is worth it or not. If you are a home buyer, perhaps you should ask yourself harder questions than, does it suit my needs for the next 10 years? Some of those questions could revolve around opportunity costs or what are the alternatives to buying. The first alternative is renting. Sadly, some people are forced into renting whether they like it or not. If you are waiting for the market to crash, what are the costs of making that decision? Let's explore this. Let's say you decide to rent in Dublin for $2,000 per month. That's $24,000 a year. Let's say you're right. Property prices do start to fade over the next 6 to 9 months and a crash slowly starts to happen. Generally speaking, property prices are slow to react. The last crash in 2008, it took nearly 4 to 5 years for property prices to hit the bottom. So let's assume you are correct and it takes 4 to 5 years for property prices to reach the bottom. In this scenario, you are renting for about 5 years. Over those 5 years, it'll cost you $120,000 to rent over those 5 years. Let's assume you were looking at a house now that could cost $400,000 and you are right, the property prices fall by maybe say 40% over those 5 years. In this scenario, that same house in 5 years time with a 40% drop is worth $240,000. That is a $160,000 drop in 5 years. You paid $120,000 in rent, so let's say you have savings of $40,000 over the 5 years. But that's not quite the whole picture. Let's assume you bought the original house for $400,000 on a 30-year mortgage and assuming you have a 10% deposit. Your loan repayments on that would have been roughly about €1,400 per month on a 30-year mortgage. This would equate to €600 per month less than your rent, or $36,000 saved over 5 years. So now that $40,000 saving is now really only $4,000. This assumes a 40% price drop over 5 years, which may or may not happen. Given the history of property prices in Ireland over the last number of decades, the odds are not in the favour of huge price drops. Generally speaking, it's very rare that more than a 10% price drop is achieved in any year. In this example of renting and hoping for a crash, it will 100% cost you $120,000 in rent. And on the chance that the market does collapse by 40% over the next 5 years, it only results in a small saving. There are many more layers you may want to add to this example, and you can make it as complex as you want. Waiting for a crash also assumes that prices will not continue to rise. You will have the same ability to borrow at low interest rates, and you will have the same job security in an economic crash. It also may limit the term you can get on your mortgage. In the example that I gave, you're going to be 5 years older, which may mean you may not be entitled to a 30-year mortgage, which may impact your affordability on loan repayments. Another option is to stay living with parents, and sadly many people have no other option to continue to live with their parents while they save for the deposit. But if you are making the decision to live at home because you're waiting for a crash, what are the costs of that decision? There are pros to living at home. You get to spend more time with your family, you have a greater ability to save, but there are some perhaps opportunity costs missed out on, perhaps on dating, entertainment, living in a city, as well as kind of maybe self-esteem and confidence. It's hard to actually calculate the overall cost of this, and is it worth living at home while you're waiting for a crash? Realistically, this is going to be a personal decision. There may be some cost to living at home as well if you have large savings, and that is that inflation could eat away at the real value of your money. Investors should also ask themselves the same thing: what is the greater risk? Is it leaving their money in the bank to be eaten away by inflation, or perhaps buying a property and receiving rental income and taking the chances on a crash happening or not? In this video, I've touched on the merits of hoping for a crash if you're ready to buy right now. I will be creating a market update video over the next 2 weeks, so make sure you subscribe to the channel now. And while you're at it, give this video a thumbs up. So for you guys, is it worth actually rolling the dice and waiting for a crash if you're ready to buy right now? Perhaps this is a personal question, but if you want, please give me your answers. In my mind, I feel the greater risk is probably inaction. But maybe you could be right if you are hoping for a crash. But realistically, do you want that to happen? Maybe some are right, maybe there will be a crash. But you also risk prices going up even further, inflation, stock levels dropping even further. You're missing out on the opportunity to build equity within a property. And the older you get, the less ability you have to get a longer term mortgage. I'm not saying a crash won't happen. All I'm saying is it something you really want? It will likely also mean a weaker economy, less job security. Banks won't be as willing to lend. It will mean there's less supply in the market because less people will want to sell their property, and it could take up to 5 years for the market to bottom out. If you want to know more about buying property, make sure you check out my playlist for first-time buyers. Also hit that subscribe button and like the video. And if you are thinking about buying or selling, get in contact.